Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be going through objectives, importance and utility of the accounting terms that we read in the last lecture. Now, when we talk about objectives, importance and utility of reports or the classified transactions that we have, why do we need them? What is the importance of such introductions, or what is the importance of such transactions being recorded with us? We could have just managed to keep a book record of it and we could have done with it. But how beneficial it is for us as a company to go ahead and maintain all these transactions being recorded in documented form. Why is it so necessary, and what makes it different from the original or from the international transactions? Or if we have to discuss about the old methodology of using a book to record all these transactions. The basic details, what we need to understand over here is, when you record any transaction, that is a transaction which has financial value, that has monetary value, and it goes ahead and proves to be beneficial for the company in terms of reporting, as you have users who have access to these information. When you talk about recording any transaction, it has two importance. One, the maintenance of these records. Second, to show the financial condition of your organization. So when you talk about financial situation of your organization and when you talk about maintenance of these transactions, they are both interrelated. If either of this is missed out, the secondary part of it is completely missed out then. For example, when you talk about maintenance of records, every transaction which you have made for your company or with your company has to be recorded in a specific format which has been provided. Once these transactions are recorded, that means you have access to any age-old data that you have. For example, if you have been given rupees 1 lakh for your usage and you use them everywhere possible, by the end of the month, if you want to know where all the rupees have been went or where all you have spent out amount of 1 lakh, and if you don't have any transaction record, it will be very difficult for you to understand or to go through the process of recollecting how this data could have been more informative, could have been more helpful for you if this was maintained. But now that the transactions were not recorded, it would be very difficult for you to understand or probably recollect every transaction that you have made out of that 1 lakh that you had. But if you had the data with you, if you had the record of every transaction which was made, you could have easily sorted out how much debit it has made to your account and how many credits have come to your account. That's how you recollect the data, that's how you reconcile the data and go ahead with the final status of your bank account. So for example, if you have 50,000 in your bank account at the start of the month, and at the end of the month, if you have 40,000 still pending in your account, that means a credit balance. That means in the month you have spent around 10,000. That is the rough calculation that you have. But if you have to go through where all you have spent this 10,000 for, it might be for 500 transactions, it might be 50 transactions in it. Now, every transaction counts. So any transaction which has been mentioned for that 10,000 will give you a classification of how much amount you have spent out of the 10,000 for financial transactions and for non-financial transactions. So when you have accountancy, it means you have maintenance of records. When you have records of every transaction, that means you have access to every possible expense and income that you have earned in that specific period which has been mentioned for you. Hence, maintenance of records is one of the key most important objective when it comes to accountancy. The second most important objective will be, when your transactions are recorded, you get to know what's the financial status. That means you are able to calculate the profit and loss of the transactions or the profit and loss of your own company, whether your company is making profit or whether it is incurring loss. This is something which you will understand if you have the records. But if you don't have any records of the transactions that you have been making, we're very sorry. But in that case, you won't have access to any of the profit or loss financial status of your country. That means when you talk about your company, there has to be a financial status which will show whether the investor needs to invest in this specific company, or whether there are certain revamps that you have to make for your company in terms of managing policies. So calculation of profit and loss, maintenance of records, two most important objectives of any of the financial transactions that you have. And when it comes to introduction to accountancy, you need to have these two most important transactions or two most important process to go ahead with the third part, that is depicting of financial status. When it comes to depicting of financial status, we ideally mean whether your company is in the state of providing further business, making further business, or whether it's in the state of getting over or being bankrupt. When it talks about financial status of the company or financial standing, that means we talk about the assets and the liabilities of the company, which is a part of the balance sheet. Once your profit and loss has been prepared, and when we go ahead with the preparation of balance sheet, we need to understand that we need to have the asset side to be on the higher side as compared to the liabilities, because liabilities is certain thing that you need to pay off back to the creditors, back to the lenders, back to the suppliers. However, asset has its own standing. Asset is something that you will go ahead and have it on your own. So the asset side has to be top side as compared to the liabilities when it comes to any balance sheet of the company. So if you have to go ahead and audit a specific balance sheet report, you need to understand that the asset side will be the topmost prioritized side, which will have more information or probably the credit worth of any company as compared to the liability. Hence, when it comes to depicting financial status or financial capacity of any company, we need to make decisions on the basis of assets and liabilities. Remember, asset will always be on the higher side and liabilities will be on the lower side, because that is the company which holds strong financial status. Now, when we talk about financial status, why do we need this financial status? Exactly, we need this to communicate to the users. So, providing accounting information to its users is the first most important objective of this specific introduction to accounting objectives chapter. So, when we have objectives, we have providing information to the users being one of the core important policies. As we decided earlier that we have two main important users, external and internal. External being the users who provide, lend or give cash to any of the companies, who are creditors of the companies, who are suppliers of the company. They have utmost trust in your company only on the basis of the specific information that has been provided in terms of financial transactions. So when you share your balance sheet, when you share your profit and loss account with them, they have that trust in your company that this company won't dupe them of their money. And that's the reason these transactions are made and recorded in terms of the balance sheets and profit and loss, and then shared to the users so that they can have access to all these details and they can make a decision of their own whether to invest in their company or not. Once this external users have been provided with all these transactions, we go ahead with sharing the details with internal users. As compared to external users, internal users hold the similar information and are key most important factors in changing the face of the company. So when we talk about changing the face of the company, that means managing the credit policies of the company. Every company which has been formed has certain policies which are either existing or which go on a revamp position as and when the situation demands for. So when we talk about revamping the whole managing policies, that means adapting to the situation which is there, and according to that situation we go ahead and revamp the whole policy structure. So if my company has been selling out diesel cars and, for example, the diesel cars have been banned from now, so will I shut down my company? No. I'll be going ahead and checking what are the alternatives that I can go ahead with. So for example, if I have electric options as an optional available where I can go ahead and enhance that market, so my product will be changed from diesel cars to electric cars. I'm not shutting down my company. However, I'm just adapting according to the situation, because there are certain investors who have already invested in my company and I cannot dupe them of the money. So these transactions or these specific recordings that we have, which we have summarized in terms of balance sheet and profit and loss, will show the exact financial status of the company and whether we are in the position to switch to a different product, to switch to a different line. That's the reason we have these transactions. That's the reason we have these recordings with us. Hence, providing information to internal and external user is the fourth most and the last important objective of accounting transactions. Thank you for watching Ekeeda. Keep subscribing to Ekeeda.